What's up, guys? Welcome to this episode of the Friday Sessions. As you can see, I am back in Australia in the studio with the boys. I'm just here for a couple of weeks. It's been so good to be back here. This is a really interesting pod. We have made a real decision and effort to try and bring some positivity into your weeks and not just doom and gloom, although, of course, the markets right now are doom and gloom. So we do talk about the markets in the second half of the pod, but I think you'll find it interesting and restorative to those of you that are really feeling it. If you bought Bitcoin at 110, 120, or you bought Tesla at the top, or whatever it is that you're into, you'll get a lot out of this second half. I share personally some very intimate details about what I'm doing right now in my own portfolio, how surprisingly I'm allocating more money to an asset you'd never think I'm allocating to. And I share a big move, a multi-million-dollar move that I made recently with some of my capital and why. And at the start of the pod, we showcased a new piece of the podcast, which is where we put a spotlight on hopefully an Aussie or a Kiwi who are living and demonstrating the values of Unemployable somewhere out there in the business or investment universe. And this week, we've got an absolute cracker, a young guy, local Aussie kid who we think is crushing it. So we put a spotlight on him right at the start. With that said, guys, if you like the content, please drop us a subscribe. Just go and click that subscribe button. Why do I say that? It's because it's the one thing that helps us get higher quality guests onto this show. The first thing they look at is how many subscribers we have and whether it warrants their time to come into the studio or get on a call with us. The only reason we do this is to help you guys, Aussies and Kiwis and all of our other listeners from around the world, to just get some inspiration and practical advice to give you a better, freer, happier life. With that said, let's jump into this episode of Unemployable. What is up, guys? Look at this. We are back in the house.
Just back time.
Well, you got the memo, I see. Good versus evil, the white T-shirts versus the blacks today.
Hey, how'd you get into the country, Adam? There's no warrants out for your arrest here yet.
More importantly, did you slide through customs okay?
I did. It was a refreshing change not to be thrown in a retaining cell.
Speaking of sliding through customs, did you hear about the man who go through airport door sideways is going to Bangkok?
I think for the first time, ever, I think we might have cut that post.
No, I think it's a great way to be back in the studio, boys. Let's kick it off with that. Welcome to Bangkok. So, guys, good to be back home in Australia for a minute. And I got off the plane last night from Doha. And here we are, 8 a.m. back in the studio. Feels like old times. So much going on out there in the market and so much to talk about. First of all, I just want to shout out to our listeners and say a big thank you for your comments over the last week or two, particularly last week. Poor old Mark here, who usually gets beaten up in the comments, got a lot of love last week for speaking up for a majority of the listeners. And so I think, Mark, how was it to read some positive feedback?
Yeah. For once. You know what? It actually felt good. No, it was good. I think I've been doing a lot of thinking the last couple of months about how to show up in the world and how to leave the biggest impact. And I think in order to do that, and this is something that you guys have all been very good at, especially you, Adam, building businesses that help people succeed, is to kind of put yourself in the shoes of other people. And, doing things like trading and investing where you're sitting in the chair on your own each and every day, and I've spoken about this, you can kind of isolate yourself. And so I guess I've just tried to put myself in the seat of the average person a little bit more lately. And yeah, some things are coming up. And, I think they're things that are helping me inform my life as well and help my relationships to get better as well. So, yeah.
Yeah, I want to thank everybody for the feedback because that is our job here, is to be of service. And, we actually just had a management meeting in Unemployable talking about an event we're putting on next year, which is the Unemployable Property Event.
Yep.
And I think one of the biggest things from that meeting was constantly coming back to forget about glitz, forget about glamour, because we had an opportunity to get some billionaires to actually turn up and speak, but they could only come on a certain day and blah, blah, blah. And I said, look, let's set all that aside for a minute and put ourselves in the shoes of the average person in the room. What kind of content on that day is going to most help the most people? and it sort of reoriented the whole event back to sort of, why are we doing this?
Grassroots.
And we decided we were going to run ads to get people to the event, and we ultimately decided, no, let's not do that. Let's do a smaller event with actually just our community of people. And if it means starting off with 200 people instead of 500 people, let's start there, because at the end of the day, that's what it's about. So again, thank you guys for the love in the comments, just on, you know, keeping us accountable, and Mark for doing that as well. And we have our meeting coming up. When is it, Mark?
Next week.
Next week, yeah. We got 2 days where we're sort of meeting in my home here on the Gold Coast, us as the 4 of us, as well as the rest of our leadership team. And it's going to be good. Just getting together and restocking. On that theme, we do have something very cool launching on the 28th of this month, which we're not going to announce what it is, but aside from it being something pretty exciting, and our female audience particularly are going to love this. So if you guys want to pre-register to be part of the live launch of the first big new initiative for Unemployable, go to unemployable.com.au, and what is the link?
/new show.
New show.
Yeah, just NEWSHOW.
So it's a new show.
So I'll just say the cat's out of the bag. There is
No, we're saying it's a new show, but not exactly what it what it is. Yeah.
So it's a new show, and we're going to launch it live on 28th. So go there. It's free to register. It just means you'll be notified to join us live for that.
A little cliffhanger. It's been great for the ladies. I mean, is it you with your new found European body doing a strip? I mean, what is
Yeah, it's Adam in his Borat costume. No, but they're actually, it's going to be shot live here at 1 p.m. So we're actually going to live stream on YouTube, which is going to be pretty cool. First time doing that, other than the live webinar that we did not long ago when we had, you know, over 350 people on, which is cool. So
We went live on the Friday pod just a couple of weeks ago.
actually that one as well, yeah, but not in studio. Not in studio, in studio. Sorry, didn't see you there. While you're here, actually, we've got a new coaching cohort that just opened up for the Unemployable Property Coaching Program, that you get taught on how to become a property developer. One-on-one coaching, bi-monthly coaching, and also events where we get a full coach bus with all the students and go to 6-7 different development sites. When I say development sites, from 1 lot to 10 lots to 50 lots. So you get to see exactly why we buy it, how we fund it, and also how you can do it yourself. The next day, we had an amazing event at the QT Hotel here on the Gold Coast, where we had all of our consultants come in and teach everybody on what they're looking for with sites, what are the different trends, and how you can become a property developer yourself. Now you see me on the video, but who you're going to be getting coached by is Shannon and Carson. Who's Shannon and Carson? 4 years ago, Carson was cleaning carpets. Shannon was a machine operator. Today, they're doing over $100 million worth of land deals. I know you're listening, and I know you want to take action. And if that's you, click on the link below or go to www.unemployableproperty.com.au and register your interest, and one of our team will reach out to you, and we'll see you on the next bus. Now get out of here.
Hey, listen, just before we dive into the content of the show, one question that did spring to mind is it's been, 9 months since you've been back in Australia. What did it feel like landing here and just getting back to May Beach on the Gold Coast? What was it like? Because you've been all over the world, Cypriot-based predominantly, a lot of Asia and Europe and whatnot. You got rejected from the States, but that's a whole other story. You've been in jail as well. I mean, but look, what was it like coming back to Australia, having such conviction and leaving it? And what was the feeling this morning waking up on the beach?
It was interesting. So the first thing you notice when you come back to Australia after being away for a while, and it was when I moved back from the US after 5 years, and I rarely came back during that time, and coming back again now, the two things I noticed, first things are the green. It's so green. I guess especially coming in from Doha and Cyprus. So, you know, they're both fairly arid places. So super green and super clean and organized, and roads and footpaths and street lights and just stuff that is just normal for Australians. And the light is, you know, just different in Australia. I can watch a movie and I know if it's shot in Australia just by the light. It's very interesting. But in terms of the place, like, you know, just I woke up this morning on the beach. I went for a swim in the ocean, and then I went down to the little local cafe from down at for those who don't know, I sold my place on the beach, but it doesn't settle till July 26th. So I still own the place on the beachfront. So I went down there and, it just feels exactly the same. Like nothing has changed at all, which is kind of nice in some ways as well. It just feels like a big country town still. You really notice that feeling though. Australia does feel like it's just sort of like a country town operating on the edge of the world. And there's something charming about that. But yeah, that's sort of the feel, I guess. But nice to be home. It's certainly nice to be back here and seeing you guys and back in the studio. So I want to kick things off with, one of the things we want to do going forward, and this is part of the feedback, is and Mark's been driving this really, is we want to make sure that we don't get too negative. And it has been challenging because I think overall it has been quite a negative period. Post-COVID for Australians has been challenging, right? Like we had that exuberance of dropping money from the sky and, had this sort of spike. And I feel like we're now coming into this period where the sins of our government are coming back to haunt them and us as a nation. We've got immigration, we've got all-time high taxation, we've got inflation, we've got all these things we're dealing with. So it is hard to be, genuinely positive when you're an intelligent person and you're noticing what's going on. That being said, we do want to be a beacon of light and we want to bring positivity. So one thing that we're going to try and do every week is each of us is going to put a spotlight on somebody that we think is embodying the unemployable ethos on the positive side, building a business, doing something in the marketplace, and we're going to try to make it an Aussie or Kiwi focus. And so, and this week I'm going to kick it off with a young Aussie guy that I came across in my Instagram feed, and I just love your feedback because one of the themes that we have been trying to push really hard on the show is this idea of learning to learn. We want to stop this habit of just using YouTube comments or Instagram DMs to try to get deep and meaningful insights into problems that we face around how do I buy Bitcoin, or is now a good time to enter the real estate market, or what's the compound annual growth rate of something. Learning to learn. We've never had better tools than right now with Grok or OpenAI and all this sort of stuff. And I want to show you this reel because this is a young Aussie guy who embodies, in my opinion, everything that we try to stand for at Unemployable. And he has taken learning to learn to the next level. So let's watch this reel together and then let's comment on it.
I'm in a group chat with 3 billionaires, Naval Ravikant, Elon Musk, and Alex Hormozi. I ask them questions all the time. It's like having an advisory board, but on demand. But that's not even the craziest part. The craziest part is how it actually works. This is an AI advisory board. I scraped every podcast, book, tweet, post they've ever made. 10,000 hours plus of content. I fed it into a database and now I can ask it anything. Watch this. I ask, if you were 22 right now, what would you focus on? Naval says, be so good you become the product. Hormozi says, skill is a volume game. But what Elon Musk says, I love. It's not just working more, it's about choosing what you work on that matters. 3 different answers, but all based on how they actually think. Here's how you can build your own. Step 1, pick your advisors. Step 2, use Appify to scrape everything. YouTube, podcasts, tweets, all of it. Now there's 2 options after this. There's the easy and the hard. The easy version, just drop all that into a custom GPT with a system prompt, act as my advisor. But the advanced prompt is where you get the most out of it. Feed it all into a database in Supabase or Pinecone, hook it up in N8N with a RAG system, and that's it. Now you've duplicated their brain. But the opportunities with this are limitless. I've used this concept for content, AI, business, health. Like imagine talking to Andrew Huberman about your personal health goals or problems based on every podcast he's ever made. But my prediction for the 2 people who'll benefit from this most, 1, the person who builds an app or software based on this idea. They're gonna make lots and lots of money. 2, businesses who use this internally. Imagine just having Hormozi drop in on your meeting, give you notes. AI is creating so many cool opportunities like this.
All right, guys. So that was Oliver Merrick. You can follow him on Instagram, and it is Oliver Merrick. So Merrick, and then it's got 2 or 3 underscores, but I'm sure he'll come up as soon as you search him. He's a young Aussie. He's got 30,000 followers. Let's see if we can get him to 100,000. I love that, Oliver. Well done.
So he's, I assume he's probably 22 by the way that he kind of pitched the reel. You know, I ask you guys sitting here today, where do you think that guy's going to be at 32?
Frightening how far ahead.
In a business with me.
What?
All right?
Eric Soren stitched him up. He's
Just DM them.
He's already DM'd him. He's got a new show starting with him.
What's incredible about this guy is that is learning to learn on steroids. Now, for the older people watching that, this is where you would get that reel, you would get your pen and paper out and you would take note of all those apps that he mentioned. And then you would go to OpenAI or Grok and you'd say, what is Pinecone? What is this? How do I use this? And you would spend a couple of hours and then try to build your first custom GPT.
But the key is doing it yourself, right? Like straight away, people are going to start thinking, well, I don't know any of that, but who can I call to ask, right? Rather than doing that, is sitting there and opening it up.
Take on it that I already looked at already to start with is you just take that, transcribe it, put it up a job post on Fiverr and get people to build it for you. And you probably take half an hour, put the job brief together and you got that done. It'll probably cost you a few $100 in total. And you've got those 3 guys there already. That's how that commercial.
What's Fiverr for people that don't know? I know we talk about these things, but a lot of people aren't going to know these.
A labour marketplace like Upwork, Fiverr, Philippines.ph, online.jobs.ph, I think it's called, for the Filipino one.
Can I take the other side for a minute, right? As you guys know, I've been for the last 12 months getting the Amazon business back on track, but also trying to launch the Shopify side of things with the ads and whatnot. And for the last 12 months, busy trading, doing macro, etc. I haven't really gotten in my ads manager account, didn't even know how to use it. And the results have been really poor. And we've got like tons and tons of videos. We've created like a content creation machine, but they're just not performing. I had a conversation with someone who has been doing this for the last couple of years, was actually inspired by one of my Amazon posts 2 years ago, started a business, now he's doing $350,000 a month. And I'm like, mate, can I have a chat with you? And I had a chat with him, and he spent 2.5 hours with me, legend, and he went through his process from day one, and he showed me that basically day one, he put ads up and he was doing sales. And I'm like, what's going on? We've been trying to run this for a couple of months, for a whole year. We haven't been able to generate sales. He goes, mate, just put an ad up. And he stayed on the call with me. He's like, come on, let's put an ad up now. And so we went into Facebook, the ads manager, we put an ad up on Friday last week, and it's already performing better than the ad agency's ad. And they've been on the case for like the last couple of months. And he gave me hope, because he showed me that from day one it worked if you did it this way. And then I went in there and actually did it myself and actually got it to work. And I know it's slightly different to what you're saying, but you really can't replace the power of just biting the bullet and getting in there and doing it yourself.
I want to double click on that, because I totally agree. James is correct. And the smart thing to do for leverage is Fiverr is spelled Fiverr. And you can get basically outsourced labor really cheap.
I'm not saying don't understand it. I'm saying understand it and guide someone else to do the grunt work.
Right.
I'd like to hand them the shovel.
Yeah.
Exactly. So, and just on that one as well, one of the businesses I'm involved in at the moment, we've always struggled with, there's a guy in Australia, Brandon, whatever his name is, from we've always struggled with getting decent ad managers, Facebook, Google, a lot. And so we've bitten the bullet and we're bringing it all in-house. So we just started his coaching program. And it's not that fucking hard.
Yeah.
After all, it's just biting the bullet. Unfortunately, my business partner is 33, so he's a good 15 years younger than I am. And he's fairly tech savvy. And we're running the account better than the ad managers are. Mm-hmm. And so they're going to get the bullet.
Yeah.
But and it's like you said, Mark, getting in there and just biting the bullet and then understanding it and then processing. Like you look at Simon from Culture Kings. He's read I can't remember the number he's doing a year, hundreds of millions of dollars, and he was the guy running his ads. Mm. So he got a $600 million exit, threaded cash, threaded in options. But if he's not good, if it's good enough for him to run his ad account, I think it's good enough for the rest of us to compete at that.
I mean, another example, right, is, and I've been in that headspace a lot, right? Like if I don't know it, I kind of like, okay, who can I call to just give me the answer or just put someone in that role? And with Unemployable, we're growing the business side, the business coaching side. We're growing the property coaching side, and we use GHL, right? And I have a friend that
what's GHL?
Go High Level. So basically a CRM. With all full automations, good CRM. It's gaining a lot of popularity as of late. So I don't know GHL, right? But I have a friend that knows GHL somewhat. So we've hired him, and he's been doing a lot of stuff in the back end. And James has some experience with GHL. And the thing is, it does a lot of things, right? A lot of automations, a lot of different things. But sometimes you could just have automations on top of automations, and all of a sudden you create this beast of a thing, and you overcomplicate things. Mm-hmm. So James has been looking in the back end of GHL. Got to make that very clear, of GHL. So
Move along.
So you called,
no, I just
called James
because I already know. Every so often I say something, I see a few smirks coming
called
around.
James because of his ability to look in the back end.
Right.
Good with
So
back-ends.
he's looking through it, and we were looking through it collaboratively, and what you don't know is what you don't know, right? And then I'm like, after seeing some of the things that were happening, right, and that the accountability comes back on who? Doesn't come back on James, doesn't come back on the person that's created it. It comes back on the business owner. It comes back on the people that are actually hiring people to do the work, right? And it's all good saying, hey, I don't know it, but now I have no choice but to dig in it with James and going like, what are we doing here? Why is this happening? Why is that happening? And then working with our GHL guy, and then finding another GHL person, right, that can help us full time at any point in time and go, hey, we need this, we need that. So it's not just the architecture is one thing, but the grunt work, the person that's actually going to be in the back end, doing the coding, doing the changes, doing all that is the key. And I've raised my hand of being the guy that's like, yeah, but that's not me. I don't know that. No, I'll just pay someone to do it. And then you realize, holy shit, I need to know this.
Or have someone that does understand it to a degree who can explain it to you in layman's terms and do it over your shoulder, i.e. what I went through there as well.
Yeah.
Do it with you, not do it for you.
Yes.
See what they know what they're talking about and explain it in layman's terms. Have a complete architectural, like a whimsical or whatever, of exactly what it is and what it does and what it doesn't do and what it should never do.
Correct.
And we found a few holes in it.
But just even with the app, like there's something about being the owner of the business that allows you to understand the nuance that is needed that no one else is going to be able to pick up, even if they're the most intelligent expert in the world, right? Like spending one day in my ad account and seeing how the ads were working for basically a $30 to $60 product, and seeing that I was able to get some traction made me think straight away, wow, this is a saturated product. We're getting some traction. It's working. I've got a product that's $400 that doesn't have any competition, that I have so much more runway to be able to experiment and test things with ads. I need to go out and do that. Now, that insight is not something that an agency is going to drive. It's not something that someone is hired to run your ads is going to drive. You kind of have to drive it by understanding that intimate.
Yeah. For every listener out there, if you've got a small business, my advice, and I think everybody would echo this, and it's basically saying what Mark said here. In my opinion, what Mark's done there is the way to do it. Is you've got to assume that every part of your business, you need to understand it. And these days, with the help of Grok and platforms like Minect or platforms like Clarity.fm, which is where you can go and get an expert in a certain thing by the hour, or going on to Upwork and offering $1,000 for a real expert to spend an hour with you. Every aspect of your business, you need to understand it, because you can learn most things, GHL, the basics, AdWords account, the basics. You can learn it in a few hours of absolutely dedicated focus. And then once you understand it, you become sort of unbullshittable, and you can hire people to actually go out and do it. And so many people don't even know how to read a P&L and a balance sheet still. And so many people put that in the too hard basket instead of going and hiring an accounting coach and say, listen, I did this years ago because I lost a business, and I lost it because I didn't understand the numbers. This is like 2 decades ago now. And I said, that's it. The days of me not understanding a P&L and a balance sheet are over. I will never be in this position again. What I love about this kid, for the young people, and then you become unbullshittable, and you can, you have so much power when you're in that position. I want to give you a quick example of how we're doing it here in the pod. One thing I'm working on at the moment is I've said, look, one of the things we do is slice clips out of this podcast, right? And we create short form content. And I've been saying to the guys for a while, what we need to do is grab the transcript when it goes onto YouTube, grab the transcript, then import the transcript into AI and have a killer prompt that says, these are the things we want to highlight in Unemployable. These are the links to the clips. These are how many words per minute. This is how long the clip has to be. I want you to go through and recommend 6 reels based on the things our audience is interested in. And then in seconds, the AI can identify from the transcript, these are the passages your audience is going to be most interested in, the most viral, and we work on that transcript. And rather than sort of sharing the idea, I went and actually did it myself, and then started split and had our team split test the things they were manually finding versus what the AI was finding, and putting those reels into the market and seeing which ones are getting the most clicks. But I did it myself, and I did it in like an hour or 2 hours of V1, minimum viable product. So it's that thing of just assuming that everything's learnable and then going and deep diving. The strength and clarity that comes from it is powerful.
It's funny you say that with the split testing and stuff, because before, when we were doing thumbnails, we were doing one thumbnail, right? And it's all resource and it's time and it's effort for our YouTube clips. And now we're split testing 3 different thumbnails. And it was probably 3 days ago. And I rang Perry, who works with us on the content side of the business. And I got pissed off because I'm like, look at this thumbnail, right? I said, look at what, and then it was Stuart, right, who works with us. Look what Stuart's written here. I swear to God, he said that exact same thing, right, on that headline 2 weeks ago. Why is he using that again? I'm like, and then he goes, yeah, but Eric, let me just pull up the data for you for a sec. And he's like, all right, here's the 3 headlines. Boom, boom, boom. And he goes, the one that you're talking about is number 1. And I'm like, keep it up then. Right? But again, we need to know what the market wants, not what we think the market wants. Let them come back with the feedback, right? And that's the thing with split testing and doing these different types of things and reaching out to different people. I'm going to use one more example, Menect, right? So for those of you guys that don't know what Menect is, it's a platform that we've mentioned on here a couple times that you can go on. It's an app that Patrick Bet-David created, and you can go on there and hire experts. You can hire them by the minute. You can hire them for a voice note. You can hire them for a text message, a video call, and we've been getting mentored by one of the executive producers from there. We made one change to Spotify. I haven't even told you this yet. Our views on Spotify are up 50% in 1 month because of one thing that he told us, and we implemented it.
Share the tea.
What did we do?
Perry knows. Right? No, we're just posting natively onto the platform, like just that one piece.
As opposed to using an app.
Correct.
That syndicates it.
Correct.
We go in direct.
50% increase in views in 4 weeks. That's going to be the fastest growing platform for us, in my opinion, this year, just based on a few of these metrics that we're working on. But we would have not known it if you didn't pay the $1,000 for the hour or whatever it was to sit down with him. And that was just one nugget of many nuggets. And again, I'm on the call. Half of the stuff that he's talking about, I don't understand because I'm not on the content side of the business. But then I'm asking Perry what's going on about it. And then he's explaining it to me. So I get a better understanding.
That's really interesting. When I was just doing some research for the survey that you sent out, I was kind of like checking out Australian podcasts on YouTube. And Dom was like, why are you looking on YouTube? Like, it's like, what? I'm like, oh, isn't that where everyone puts their podcast? But what I realized is that a lot of the following of famous podcasts on YouTube is pretty low.
Yeah.
And that Spotify is actually probably a bigger marketplace for people to go and find podcasts.
Definitely.
And it's just those little nuances that if you never actually dive into it, you don't find. And that could be the difference between the Unemployable podcast going from 10,000 listens a week to 200,000 listens a week, just dialing in one little platform.
Yeah. For perspective, that coach that Eric's talking about, the executive producer of the shows at PBD's podcast, I mean, I think they did 1.5 billion views in the last quarter. It's one of the biggest podcasts in the world, and the guy behind it is available on Menect by the hour, and he's been coaching us now on a regular. Yeah. And
we're creating a relationship with them, right? Now with direct contact, all these things. Like, it's amazing. Like, if we ever fly down there into Florida, guess what? Hey, Rob, can we come over? And next thing you know, who knows?
And for the young people listening to this, and I just want to make this clear, or if you've got a young person in your life like this kid that we just put a highlight on, the first thing I did when I saw that reel, I did 2 things. 1, I followed him. And 2, I went straight to our group chat with Eric and Perry and said, can somebody reach out to him and see if we can hire him as a consultant to help us look at how we can use AI better in amplifying our pod. So for the young people listening, the key was this kid is clearly an expert at what he's doing here. And he's also learned how to make content, and he's put it out, and he's given away the nuggets. He's shown you, these are the apps you use. This is how you do it. Follow me for more. And then in his bio, it's how you contact him. This guy is going to be successful.
We need to get him on the pod.
Yeah.
Yes. but he's going to be successful because he's focused on becoming an expert. Because when you're young, you've got heaps of time that you can learn to become an expert, and you can also learn to become a content expert.
And it's like back when electricity or whatever happened, the Industrial Revolution, where everyone thought that their jobs were going to go by the wayside. Well, yeah, if you're old, if you're 50, 60, you're probably not going to retrain in the new jobs of the future. But this kid is a glimpse into the future about what kind of service-based roles are going to be out there. Because in 10 years, 15 years, he's either going to have a company that employs people doing what he does, or he's going to be teaching millions how to do it, and people are going to be doing it. And he's showing us a glimpse into the future about what the workplace is going to look like.
100%. If you're a young person, live cheap, work at McDonald's, whatever the hell you got to do, and then follow 50 guys like him online and be the Australian version of the AI expert or another version of him, and just create content for 2 years. And at the end of 2 years, you will have so much business coming at you as a young person, you will not know what to do with it.
And just to tap on the other side for a minute, we've spoken about in the US, I think it's 20 to 24-year-old, the unemployment rate is the highest it's been in a long time. In China, DeepSeek is saying that the same thing is going to happen. They're going to have a crisis, and their unemployment rate from like 20 to 24 is like 18%. So we are in the middle of the disruption of industry and disruption of jobs. We're right here now. It's not something that's coming into the future. It's happening right now. And the guys like this are definitely the antidote and need to be plugged in.
Speaks about the jettisoning of disruption. You see all the majors, the Mag 7, everything, just jettisoning staff left, right and centre. Like it's a massive cult.
No, it's not that. I don't think it's that bad. I mean, they're getting rid of staff, but it's
starting because of AI. Is the point.
Yeah. But it's more. It's at the moment. It's more interns. Right, like it's more the younger entry level because they say to themselves, well, why should we train up an entry level staff when we can train an agent or we can train AI to do that role? But soon you're probably going to your point, you're probably going to see middle management and all the consultants go by the wayside as well.
The highest paid, right, in the organization is always the one that's in the highest risk. Right, they're the ones that get cut off at the knees first, in my opinion.
Especially if you're not a revenue generator.
That's the thing, right? If you're in revenue, and that's what people got to think about, right? Like if you're in that scenario where you're this high wage earner, right, in a certain position, you can't think that you're going to have that job forever, right? Like we have to think about business. Why do people start a business? Is it is it for themselves or is it for others? As in the product or service could be for others, but why are they actually starting the business? Is it to better their life?
Yeah.
Or is it because they want to better 250 other people's lives by hiring them?
Profit first.
Right? It's profit first. There's not many people that I know are like, you know what? Okay, I want to go and do this because I want to go and hire 1,000 people and deal with every single headache that they give me. So if you're that person, it's just something to think about.
Just our small scale e-commerce business, right? Like for the first time in a long time, we're about to launch a new product range as part of the business. So it's not high risk. It's a very low cost item. And we're talking about all the other potential products and things that we can do. And I honestly believe that we can double our sales with the same headcount. For the first time ever, I think we can do double the amount of revenue with the same headcount. Because all the jobs that we had to do, like creating images, like creating content, all the stuff that you have to do for an e-commerce business has now become so much easier with AI.
Oh, 100%. And it's the same in our business. Again, just that one example of how to find reels that are good using AI. And now there's tools that can go in and do it. It's a great time to be alive. All right, so let's move on. I want to change gears and talk about the market. So I'm interviewing Bish tomorrow from Stormrake about where Bitcoin's at, but it's not just Bitcoin that's seen massive drawdowns. Tesla's dropped dramatically from 460 down to it hit 370 or 380 last week briefly. 380. It sort of bottomed out and bounced around 400. So we're seeing huge turmoil in the markets. And I'd be interested in your take, Mark, because what I've been consuming is a whole bunch of content specifically around Bitcoin. And I've been listening to people right across the spectrum, and I'm interviewing Bish tomorrow specifically about where they're seeing, the Bitcoin price go. I've got my own views on what I think's happening, but I'd love your views, Mark. Like, you might want to tell people where you are with things at the moment.
So I think, high level, I think I said last week or the week before on the podcast that 97,000 for Bitcoin USD was a key level. And if we broke that, nothing good happens under 97, that we needed to hold 97. And if we held 97, I thought that in Q1, Q2, we could do 125, 150, 170.
We're talking US dollars.
US dollars, right? But we haven't held 97. And indicators are triggering. That basically the last couple of times that they triggered, you saw a 50 to 70% drawdown in the price of Bitcoin. A lot of the view that I have at the moment, and a lot of the people that I follow, kind of see Bitcoin as the last functioning fire alarm for when things are about to start getting difficult. You see the S&P, right? Like in the last couple of months, a lot of the high beta names, which means names that have gone up 300-400% this year, have come back 50 to 80%. Right, and what you're seeing is that these retail names are usually leading the market. So you got Bitcoin that's like a smoke detector, and you've got these retail names that lead the market in direction. And they've come back a lot, and now you're seeing the S&P, which is only like 3, 4, 5% off its all-time high now, but it was only 2% off its all-time high as of last week, is now coming off as well, and it's starting to deteriorate. My opinion was that we would see strength into Q1 next year, and then we would get a 20 to 30% pullback, a significant pullback. It looks as if my base case on that has changed. It looks as if the pullback is coming now, and like I said, indicators on Bitcoin that the last time they triggered, you saw a 50 to 70% drawdown, are triggering, and 97, which is that kind of line in the sand, has breached. And I think we might be in for a little bit of a crash crisis, and I think the stock market will follow it. But after that, more liquidity comes, right? I think everybody kind of tried to front run the big print. We've spoken about it on this show. Larry Lepard talks about it. Everyone's kind of trying to front run the fact that they know that the Fed and central banks have to put in more liquidity. What I think people haven't taken into consideration is that just as they have the power to pump markets, they have the power to crash markets in a way. Like 3 Fed governors last week all came out on the same day and said, guys, I don't know what you're thinking, December rate cuts, but they're not in the bag. It's like it sounded very coordinated. And so I think, yes, that everybody knows the big print needs to come, but I think there's going to be a risk-off period first. And I think, you could see significant drawdowns. I've given back some of my gains that I made in 2024, and I've gone basically, except for my HODL stack of Bitcoin, which I purchased many years ago, I've basically gone completely to cash in all of my accounts, and I'm waiting to see how it pans out, because I can ultimately buy back higher if I need to, but if it goes down, I don't want to be riding everything all the way down. So
it's funny you said earlier off camera that your property settles in July, and it's probably not a bad time to have a bit of liquid cash, because I've been thinking, just seeing what's happening from the outside, I have, a lot of my wealth in property, thinking of maybe selling off one of the properties, get that liquid, and invest in some of this, when the blood hits the streets, which I think is kind of, it's not that it's happening, right? Like we're talking, there's, I mean, when you look at, Bitcoin is an example, and you pull up your Bitcoin stack and you look, oh, wow, look what it was worth 6 to 8 weeks ago, and look what it's worth today, right? Like you can have all the conviction and the rest of it, but you still have that decline and going, okay, but then you need the conviction to go and buy. Like for me saying, hey, go and sell the property and actually go buy it. Like you actually have to do it rather than just talking about it. You then got to call the agent, you got to go get an appraisal, and you got to put your balls, on the line and go and do it, and then hope that, with the Tesla pullback or whatever it is, or dollar cost average over that time. And like I was talking to a mate of mine who was new into Bitcoin, and he would have bought at probably near the top, right? And I'm like, dollar cost average, please, just dollar cost average. It doesn't matter. I'm doing this for long term. Yeah, but still, you want to try and get your best foot forward as much as possible. And if you just dollar cost average, whether it's not daily, it could be weekly, it could be monthly, whatever that, you work out, you could be buying right now at, 94 or whatever, I haven't looked at it today, but
no, I think it was 91 earlier.
91, there you go.
But yes. And like I said, I've my hodl stack of Bitcoin is the only thing I've kept, but the Bitcoin that I bought for my folks, I sold that because I don't want them to wear that drawdown if 50 to 60% drawdown happens. So I've sold them at a profit, and if it goes up, I'll buy back higher, and if it goes down, I'll buy them double the amount of Bitcoin. And I think it's so important, and we can't just gloss over what you just said, because now people's conviction is going to be tested. And I still maintain that the best trades over the next 5 to 10, 15 years are going to be gold and Bitcoin. But you can't buy at any time necessarily unless you're dollar cost averaging. If you're dollar cost averaging, then it matters less what your entry price is. But if you took your entire stack of money, 100 grand, 500 grand, whatever it was, and you put it into Bitcoin at a certain time, and then it goes down 50%, your conviction is going to be tested, right? So, these are the things that we have to consider. The other thing is, like, the last 12 months, gold is up 100%. The stock market is all-time highs. Everything is priced to perfection.
It's interesting on the way here. I was listening to a pod we all listen to, Invest Answers, and they had the 4 guys on there. It's like an emergency pod about the year and whatnot. And it's interesting. Be careful who you listen to. Obviously, one of the guys just said, like, it's like, which influencer are you listening to in an unregulated market using leverage? I mean, it's got a heavy concoction of fuck up written all over it. But then you hear these guys who profess to be the professionals, and all I took away from a high level, I'm not a macro trader like you, Mark, is they don't have a fucking clue. None of them do. That's all absolutely speculative betting 101. All the current indicators that have been historically for the last 4 year cycle, all the correlations have been blown out of the water against gold, against everything. There's no correlation now that stands that formerly did for all the last 4 year cycle. So it's brand new uncharted territory. What is their take on it?
What I'm finding as someone who's been, like, since 2018, 19, kind of daily looking at or learning something, is that the cycles rhyme, but every cycle has this nuanced different thing that catches people out. Like, I would have liked to go into cash a lot sooner than what I did, but I was of the opinion that it was going to continue. And so every cycle has this little nuanced thing that changes, that catches people off guard.
Big nuance like this around.
Well, I mean, the cycle has been the timing of the crypto cycle has been exactly the same as past cycles in terms of when it's topped. But the thing that is different this time is all the top indicators didn't go off.
Mm.
Bitcoin's
it didn't have a parabolic run.
Yeah, it's
even with all the hype behind it, with all the insto behind it, with all the exception behind it, everyone thought.
But if you look at why it didn't have a parabolic run, right? There's always an explanation for it after the fact. The reason that Bitcoin didn't have a parabolic run, and the reason that the altcoins didn't have a parabolic run, is because where did the parabolic run happen? AI stocks and call options. If you look at the volume of call options, it just exploded. So all the degens, retail degens that would have been playing in Bitcoin and alts, were playing in AI and call options.
Degens, for the listeners, means degenerative gamblers. It's people who are basically taking leverage and gambling on things. And what Mark's saying is, usually that's unsophisticated retail punters that throw caution to the wind, lever up, and then just try to chase the dragon.
They cause the parabola. They cause that spike.
Mark, it's funny. I took a screenshot of one of the this thing they had this morning because you'd love it. I think it was Glass Hour, where you can see the longs and the shorts and whatnot. And even after that recent flush on the 11th of October, the volume of the perps long compared to shorts is just nuts. It's ready for another flush. People are so bullish. It's not funny.
And we spoke about that before the show, Adam, that I was talking about this article that was in Variety or something about the meme coin traders that are going to free their bloodline. And the Luke Groman, Forest for the Trees, who was citing the article, basically said it reminded him of a book he read 15 years ago, When Money Dies. And it talked about Weimar Germany and how in these periods where there's a fiscal mess, there's obviously a fiscal mess, which is, incidentally, the reason that we've been talking about all the negative things we've been talking about is the fiscal mess is the reason. But that's what people do. They go into this speculation mode, this degen mode, this gambler mode. And with that, social cohesion and morals and trust and all those hardworking values kind of go with it.
It's funny because, like, I was listening to a post by a friend of ours, Dom, and he got asked a question, Bitcoin or property. And I said this before on a pod, I think, too. Like, it's hard to beat leverage manufactured growth, right, in property. Because you've got control. The reality is this: we have no control in any market,
with any extra,
right? Because the property market can run hot, and then all of a sudden immigration stops, and all of a sudden they increase interest rates. Well, guess what? That's going to have a massive impact on property. What control do you have over it at that time, right? The same thing with Bitcoin, same thing with stocks, the Tesla. No one has control, right? You just got to try and be as best as you can on reading the play.
I got some feedback last week, and the guy was full of praise. I sent it to you guys. The guy was full of praise on the pod, watches it every week, but he was kind of a bit distressed at the fact that we all had differing opinions on property, and he thought that we should become more aligned. And I kind of said, I appreciate that, but if you're confused, that's a natural reaction to the state of play that we are living through right now. We are going through a changing times. We're going through a time where it's the right response to be confused because we don't know how it's going to pan out. In order to reshore the US, in order to reshore here and get productivity booming, we need to pay workers more, right? Like we need to incentivize people to increase productivity. And that's going to create secular inflation. We've had secular deflation for the last 40 years. It's a complete regime shift. And so if you're uncertain, it's the right response because things can change very quickly. And the one thing that I can guarantee during this time is volatility. I can't guarantee what price things are going to be when. I still believe that putting money into gold and Bitcoin is going to outperform property and is going to outperform the stock market as a whole. That's my personal belief. But the one thing I can guarantee is volatility. You're going to get plenty of opportunity.
Just speaking to Bitcoin for a minute, where we are now is not far off where we were a year ago. Bitcoin's actually been...
We're down on the year.
Yeah. It's not that far down, but it's actually been less volatile than the market. It's been less volatile than gold, which is really weird for Bitcoin.
But you can't say it hasn't, because gold has doubled in that time. The stock market is at all-time highs. So it's down. The thing that's totally difficult is it's down on a year where everything else is up. And that's kind of strange.
Yeah, exactly. That was my point. It's not that Bitcoin's great or anything like that. I mean, I think Bitcoin is amazing, but it's just totally uncorrelated and not making any sense.
Like at all.
And I've been listening to, I tend to, James, agree with you, is that in the last crypto crash, I remember Raoul Paul, I'm unreasonably long on ETH, right? I went and invested $2 million into ETH at that time. Jeez. When Raoul was like,
when he bought call options. I bought 5% of my portfolio in call options.
Yeah, that 2 million turned to like 500 grand or something like that, and then I rotated it out, put it all in Bitcoin, and this time around he's been flogging the banana zone, right? Like he's one of those voices, those talking heads, and their receipts when you go back are all dog shit, because what you said, James, is a lot of people don't understand. But I do want to add some commentary because I've watched a lot of content around Bitcoin particularly. And I've been watching people like Dan Tapiero, came out this week. And Dan, I met in Dubai and interviewed for the pod. If you haven't watched that pod, you can watch it. Dan's an incredibly successful investor. He manages $2 billion of other people's money. And Dan had some really interesting thoughts. I listened to Jason Pizzino, who we also had on the pod, who's a data analyst from Australia. JP Morgan came out and said 94,000 is what they predict is the Bitcoin bottom, which is where we are kind of right now. So there's all these conflicting views. But talking about Bitcoin just for a moment, some of the things that I sort of think about it is that Bitcoin is relatively simple. It's one of the most honest markets in that there's only a fixed supply. You can't manipulate the supply or anything else. And at the end of the day, all markets should be based on willing buyer, willing seller, etc. And so with Bitcoin, the reason the price hasn't gone up, in my opinion, and this is what Dan said, and also what Jordi Vissa sort of said, is that we've had this IPO moment in Bitcoin. So what's happened is when we hit $100,000, and Dan Tapiero said this months and months before it hit 100,000, he reckons once it gets to 100, it's going to stay there for a while, because what's happened is we've had the structural change in the Bitcoin network and who owns it. In the past, it was all Main Street. It was mum and dad investors and tech bros and, cypherpunks and like individuals. Now, Wall Street has woken up to what Bitcoin actually is and the power of it. And I've spoken to institutional investors when I've been traveling the world and big family offices. And, these sorts of things, sovereign wealth fund people who are actually now flooding their money into Bitcoin. So what's happening is when it hits this $100,000, there's been these hugely wealthy people that are like, all right, I'm now going to have my IPO. I'm going to take off the table this money, because for them, the likelihood of getting the returns they've got when they bought for $10 or $100 or $1,000, and they look forward, sure, Bitcoin will probably go to $1 million a coin, but that's only a 10x. For them, relative to them, that's nothing compared to what they've had. Of course, they want to take some money up. Now, the Bitcoin maxis are going, why would you flick the Bitcoin for something that's inferior? Say that when you've got a few $1 billion of liquid that is available to you. So he's basically saying, we're having this structural change. We're seeing whales sell at this 100,000, which is a huge psychological milestone. And of course, they're rotating out. And the Bitcoin market has structurally changed. We've had, and what Dan said is, look, there's going to be I draw down here now, and he said it could go down to 70, it could go down to 50, but then I think it'll roll back to 300, 400, 500, et cetera, in time. And that's what's normal. It's not just Bitcoin. You look at any of these big companies, Amazon, Facebook, any of these things in the early days where they were establishing price, that has been the journey of all these major assets. And so, and the average person listening to this, if I put myself in their shoes, what I think you need to take away from this is trying to be a trader in these markets, even a swing trader. So there's day traders, which make their money on the daily or weekly, right? And then you got swing traders, which generally sort of wait for Bitcoin to crash, then come in and buy, and then wait for it to high, and then go and sell. And that could be a months or years type of activity. And then there's long-term hodlers. I agree with Dan Tepiero when he says, if you are trying to be a trader, you're probably going to lose. The only thing is to get deep conviction about what you're investing in these things and hold for a longer period of time. And if you hold for 10 years, it's almost impossible to lose your money if you know what you're doing.
Yeah, I agree with Geordie Visser and the structural changes. I think we spoke about them a couple of weeks ago on the pod. And I believe that that's why potentially Bitcoin has underperformed this year. But I think the biggest contributing factor to the price of Bitcoin is the liquidity picture, right? Like how global liquidity is looking. And if liquidity was on the way up, you probably would have seen less of these OGs selling because they would have been riding the price. But I think the fact that liquidity is coming out of the markets, like we're seeing at the moment, is what's led to a lot of them selling. But I also can what you said about trading, I can 100% vouch for, because in 2024, I made like a handful of trades, swing trades, where I saw an opportunity, went in, bought, wrote it up, and made money. This year, I started a 10K challenge. I started trading much more than what I wanted to trade, because that's the thing. Trading becomes like a little bit of an addiction where you're just putting on trades for the sake of it. And the more that you trade, the more you increase your likelihood of failure.
Totally.
Because even the best traders in the world have a win rate sometimes of only 50%. So the more you're trading, if your position sizing is not right, the more that you can lose.
I mean, if you look at stats, I used to have an FX business. We had a brokerage. We see that the receipts, basically, 93% of the people who technically trade lose money, retail, because they get wiped from this insto. So mum and dad, if you're listening out there, if you're losing, it's the stat. 93% of it, people get cleaned up. In a choppy market, probably more. But on the daily, it's not a fun sport. It's a tough sport.
But I because I know we've spoken a lot about this in heaps of episodes. So I just want to just say for the record, I still personally believe gold and Bitcoin over the next 10 years, like you said, you will not lose money. But everyone at home needs to make sure that they have a strategy, like Eric was saying before, with dollar cost averaging, etc., that they are comfortable with when the drawdowns come, because the drawdowns will come and they will continue to come.
I bought 30 grand of Bitcoin this morning at 92. Do I think it's going to go lower? Maybe. Do I think it's going to go higher? Absolutely.
Yeah, but you didn't buy $3 million worth of Bitcoin. You didn't buy 300 grand's worth of Bitcoin. You bought 30 grand's worth of, and this is what I mean, right? Yeah. Everyone has a different strategy, but most people don't know, right? They haven't worked the calculations of what do I got, work out your percentages in assets, in liquid cash, where it should be, again, someone like yourself could be buying a lot more Bitcoin than 30 grand, but you're buying 30 grand because you're comfortable with that. You're going, you know what, if it goes down to 70, it is what it is, but my conviction is going to go back up anyway. So it doesn't matter. And then in a month from now, you'll buy another 30 or whatever it would be. But you understand, right, your levels. I think most people don't understand what their levels actually are because they don't have the plan, like, right? And they're trying to read a playbook without having the plan of going, how much are you willing to risk?
And this comes back to what we were talking about, that everything is becoming a zero-sum game. It's like Bitcoin becomes my Hail Mary because I don't know if my job's going to be here, or because I've got to make it somehow because I don't know if I can make it in property, right? And that's that's the danger of getting caught into that vortex of information, right? And that's why I've personally want to keep pushing for positive news stories so that people don't feel like they need to make desperate decisions, because I know that when I get that rush of needing to make a home run or a desperate decision, that it doesn't bring the best out of me at home with my family or in my trading, right? And so I'm pushing that because it's also a real-time thing and a change that I'm trying to change in my life. Because, I don't want to get woo-woo, but it all comes back down to, why do we do those things? Because on some level, we don't feel like we're enough compared to the next guy or the next guy or the next guy. Right. And we need to return it back to gratitude and
talk about
the opportunity that we do have in this country. Like, sorry, one more thing. I said to Eric last week off air, I said, if each one of us was wiped materially to zero tomorrow at this age, how many of us would actually go overseas to try and make it back versus staying in Australia, right? As a thought experiment. I don't know if I'd have the courage to go overseas and do it. Adam, maybe you would because you've done it before, but the opportunity is still here, I think.
I was just saying on the woo-woo part, if you're Dr. DeMartini, in every positive there's a negative. I mean, if you hunt for negative, it's going to be there. If you hunt for positive, it's going to be there as well. So, I mean, it's not all out of kilter. The world is not all shit. There's plenty of upside to it as well. If you
everything's in duality.
Yeah. So for listeners out there, like I think for the average hunter listening to this, you got to think in a 10-year time frame with your investments, not in a minute. I know if you just bought Bitcoin at 120 or at 110, it feels horrible right now. I bought Bitcoin at 69 and then watched it draw down to 19 and 15 at one point it touched on. Imagine how that felt, right? And then I bought more when it was down at 15, right? So I know the feeling, but that's emotional. And what all of this stuff teaches you is one of the greatest lessons in Bitcoin is it teaches you to have what they call a low time preference. This is vernacular from the Bitcoin world.
Please dig deep into this because I think this is so important, even with the woo-woo part of it.
The low time preference means, like in today's world, everybody wants results instantly now. Whereas when you zoom out on any of these things, you'll see that time is the only is the superpower. And what the reason I advocate for living simply, and the reason, like some of you saw on my socials, I was in Doha the day before yesterday, this amazing shopping center. There's literally nothing in there I wanted except the coffee and a croissant, right? But when you get to that point where you live simply, you keep your living costs low, and what Mark's talking about with gratitude, when you have your values in place and you go, I got my kids, I got my health, I got my family, I'm good. Once you get into that healthy mindset, you can then have a lower time preference for things and you don't freak out, you don't panic. I look at it right now and I'm just like, I've done my deep research. I'm buying things that I believe in that I think are cheap right now. And just be patient, give yourself time. Even my property's so good because it's so forgiving and it's, in time, it'll go up. The thing that I think at the end of what I guess what's a lot of this confidence is coming from generally is that I think Lawrence Lepard is correct about the US. I think there is no way they're not going to print money at a scale that we have never seen before. It could be the last hurrah for the US when they do this. It could be the last, drunken, party where they just go, we have to print like crazy here, because if you've done any level of deep research, no government is going to choose not to print over.
It's print or default.
It's print or default. And the US, I think, will just print like crazy and hope that they can, grow their way out of it. I don't think they will, but we'll see. AI might be the savior, but we'll see. And when that comes, hard assets is where you want to be. And when I look at the hard asset universe, I choose Bitcoin. That's me.
I just want to mention one thing, because I've had a couple of people reach out through DMs, and I was at the markets and somebody I knew came up to me and asked a question. Last week on the podcast, we were talking about, assets and buy and hold real estate. And we must have obviously, specifically me, said it's not a good strategy in my mind. For me, I just want to be clear that was for me, because I think the returns of that now are not going to be like the baby boomer returns. Not like Eleanor that bought the house for $26,000 in Mermaid Beach that's now worth $4 million, right? Just like the Bitcoin that when people bought for 1,000, that is now, people are liquidating because they're like, I made my 100x. So I just want to be clear, for some people, right, the buy and hold strategy will be a good strategy, in my opinion, if you want, single digit kind of returns,
Keep pace with inflation.
Keep pace with inflation, compound over time, if that's what you want and that's what your risk tolerance is. My risk tolerance is a bit higher than that. And I like manufacturing the equity, because as much stress and the bullshit that there is, over the last little while, I've had to be on site, right? Pushing this last job over the line. And I've been enjoying myself on site. I actually enjoy it. I enjoy chatting with the boys. I enjoy, there I am, removing pallets and just getting shit done. I really enjoy that, right? And I know, that I'm building that equity at the same time. And I know the return that I'm going to get on my money when I, eventually sell this thing. So for me, those returns aren't good enough. So I just want to be very clear, because there's been a few people that have reached out. Again, just work out what your risk tolerance is, create a plan, and then whatever playbook you decide. But the buy and hold strategy, I'm not saying it is shit and it's not good for anybody. It might be good for some, but in my part right now, it's
you might be able to, if you can buy property well at 10 or 15% under market.
Yeah.
And you can buy and hold a property in a location that's going to grow above the Australian average.
Yeah.
So instead of growing at 8%, it grows at 12 to 14%. Well,
yeah.
You've manufactured 30% on a property there. And so if that is your strategy and that's what you're going to do, you can do well with buy and hold. But we're not, I think the mistake that some people make is that they tune into the show expecting to find the golden bullet. And there is no one golden bullet, right? And we're only giving snippets of different strategies. We're not providing all the nuance, but we're trying to have the conversation in real time, because we're trying to help everyone work it out in real time as we're working it out, right? But ultimately, you have to really dial into whatever strategy that you choose and make sure you know the nuances and the ins and outs. And if you're going to adopt that strategy, that Eric doesn't do buy and hold. So if you're going to do buy and hold, you're going to need to understand buy and hold better than Eric to be successful at it. Right?
But again, even with this, none of us are experts. None of us are buying Bitcoin straight at the bottom and then making all the money and not losing anything on the way through. It's like property. I've done some good deals over the last 10 years, but let me tell you, I look back at some and go, how did that guy buy that one and I missed it and he did 5 times what you know what I mean? And no one has that, like you said, the golden bullet. No one has that, right? Like here, it's just about educating yourself as much as possible. And in my opinion, the best thing you can do is spread the risk.
Yeah.
Right. Don't have your eggs all in one basket. And you're not just hearing it from me. You're hearing this wisdom from the bearded philosopher, right? Who is the
That's
man
what they called
on the
you.
pod, right?
That's
So
what
for
they
those
called
of you guys that don't know,
I didn't read
the best comment, right, from last week was someone that wrote, you know what, I'm actually loving what Mark is saying. He's turning out to be the bearded philosopher. So you've got a new nickname, mate.
Thank you.
I
like that better than Macro Mark. I like it better.
For I with some of this money, and I'll talk about it when I'm ready, but I'm allocating a little bit more to property next year.
Hold on. Okay, hold on. Let's see that in instant replay. Can you repeat that again, please? Do you remember Ace Ventura?
I know you're shocked. But
it just means that it actually gives me more confidence that you're thinking that way.
Yeah, not in Australia, but
but in general,
yeah, because like I want my income to be super solid, right? And so I'm putting some money with Banter because I believe that there's the returns they're getting are great. I think they've got a real moat around their business. That the money is going into a physical hard asset that has got real world, non-subjective value to it at some level, right? Like there's land and there's buildings and there's infrastructure. So I want to make sure that my day-to-day base income comes like my caravan park. The check just comes every month. It just keeps coming. And I want my base level living needs to be in a place or coming from a place where there is pretty much very limited volatility and risk.
Yeah.
And that's going to be property. I still have a few $100,000 a year coming from property, and I'll put a little bit more just to keep that going. And the other thing I like about that income source is it's indexed to inflation, right? These are operating businesses or real estate that goes up in time. So in terms of capital growth, there'll be little to none, but I'm not there for that portion of my.
Well, it's hard to get both.
Right.
If you want the capital growth, don't expect your 15 plus percent returns.
What I'm sort of saying is I'm valuing my peace of mind that comes from that.
Correct.
So, and this is something that you can sort of look at things, go, oh, I need to be all in on Bitcoin. Okay, great. You're probably over the long term going to outperform everybody. You're also going to age an extra 10 years, right?
Yeah.
Like, I look good for 21, right? Like,
I love those memes.
yeah. But if you're like don't have as big a wealth cushion, this time in Bitcoin can be really, really stressful when this is your retirement plan. So, all I'm saying is just sort of, value, like Mark said, you got to value those soft, intangible things, and it helps you have some diversification into things.
And the longer that you study capital allocation and investing in across the board, the more that you realize there's always a bull market somewhere and there's always a bear market somewhere, right? And these things ultimately always go in cycles. It's never up and to the right or to the moon with trees don't grow to the sky. I lost my trail of thought. But the bear markets, when they come, humble everybody. If you haven't done the work that
Correct.
People that we're talking about, that Adam's talking about, that to making sure that your peace of mind is taken care of, making sure that you've diversified away. Look, if you're getting 15% return on 25% of your assets and you're getting a 50% on the other 25 and the other 25 is down, like that's the game, right? You can't be getting 100% returns on everything all the time.
I was just about to say, talk about cycles. I mean, it's no more clearer than the Australian property market. There's a housing shortage, there's a crisis and whatnot, yet Melbourne is off its all-time highs. I mean, it's not pumping down there. It's pumping here, and it will change. Like the Earth's on fire, that will pull back.
It's happening now. No, the eastern suburbs of Sydney, prices are falling through the floor.
Correct.
I got a mate who built a house in Sydney as a developer, and he said this house would have been sold 10 times over in the first month, going back 2 years ago. He says, been sitting on the market. I've had to discount it and discount it and discount it. I can't believe it. I can't sell this freaking house.
Yeah.
My apartment was very difficult to sell, right? And it may not even settle. Who knows? Like, who knows?
I've got friends in Sydney that were here not long ago, and he owns, they do some big high rises, right? And he goes, I own a block of land, right, in Sydney that I can build 300 apartments on. We've owned the land for a long time. So basically the land is free, right? That's how long ago they bought it. And he goes, it still doesn't stack. We cannot build it and sell it with no land content, right, and make a return. So it's just sitting there paying the land taxes, and it's negatively geared, paying the interest and the rest of it. The Sydney market at the moment is not good.
Go ahead.
I was just going to add one more thing, and this is something that I've kind of watched and seen and anecdotally seen, and I'm going through myself. The higher your risk tolerance for success, like the higher your risk tolerance is, and the more that you're willing to give a go. And I've seen you guys kind of do it, and you've told stories about how your wealth came from 40 to 50. The more you're going for it, the more you're going to have setbacks, and that's something that you really have to get used to as well. So if you're out there watching and you are going all in on Bitcoin, that's, well done. You're going for it, but you got to be prepared for those setbacks, whether it's starting a business, whatever it is that you're doing. So if you're one of those people out there that has a lesser risk tolerance and is happy to do buy and hold, then power to you as well. But know thyself again is so important. But just seeing your story, Adam, it kind of gives me so much hope that even though I have big setbacks that I'm on the right path. Totally. It's like no one that succeeded did it without.
Yeah, but the beauty with it, Mark, right? And this is, I mean, Adam's created an amazing survey for all of us, right? Because we're catching up about the pod and asking some deep questions. And one of those questions is, are you happy to basically share your wins and your losses, and how open do you want to be? Like for you, sitting on here and going, hey, I've just lost X, and I'm just like, it's humbling, right? But it makes everyone else more comfortable as well, because it's like, it's not just me. Right.
I want to share just a quick story to close this out, a personal finance restructuring thing. So I've had a lot of money in first mortgage lending, as you guys know, which is basically money that's being lent to developers. But the smallest loans are kind of, I think, 15, 20 million up to about 150, 200 million. And I've had money there, millions of dollars.
So let's clarify, this not your 50, 100, it's a fund. The loans are
correct. So yeah. So it's a fund managed out of Melbourne, done an amazing job. They've been fantastic to deal with. And they make that, and there's, I think, $2 or $3 billion in that fund. And they then lend the money for developers, and the loans are $15 to $200 million loans. So they're bigger developers, wealthy Australian families, basically.
Tier one style developers.
Yeah. And it's a fixed return, 9 to 10%. It started off at nearly 10, it's come back to 9, and now slipping under 9 as rates have changed. And so I've had a lot there, and I pulled a bunch out recently, and I've just got it in cash. Right now, I'm a huge Bitcoin maxi. Why don't I just dump it all into Bitcoin? Right? I'll tell you why. I'm sitting in cash, an unusually high level of cash that's liquid, and normally I would allocate. Right? I had $1 million sitting in my share trading account. I was going to buy $1 million worth of Tesla, and I bought 250 because I listened to a mate Ben. Right? He's like, Adam, you fucking buy everything just impulsively, and you've got to like dollar cost average, right? Like, and I bought $250,000 block of Tesla, and then I thought, I'm going to wait, and I'm going to, listen to Ben, I'm going to put my bid in under the market, and then Tesla sprung to like 450, 460, and then I had $750,000 sitting in cash in my share trading account, which I still haven't allocated. And there's two reasons and I want to share this with people and you're talking about maybe liquidating a property. Warren Buffett is sitting in a massive, massive, massive amount of cash. Warren Buffett is no fool. He has been through 10 of these cycles in his lifetime, right? He is sitting in all-time levels of cash. I only once truly timed the bottom of the market in the stock market, and I don't normally invest in the stock market in a big way. Most of my money came from real estate. And when the 2008 crash happened, my dad rang me up and he said, Adam, and he's been a public servant basically his whole life, never made a lot of money, but he became a gold bug in the sense that he bought gold stocks and he made millions of dollars and then lost millions of dollars by absolutely knowing everything there is to know about gold stocks. And knew all the executives, where they were working, what their past performance was and everything. When that crash happened, and it's been a while, people have short memories, but when we have a proper crash, this is not a proper crash yet, right? Yet.
Yes.
When a proper crash happens, the younger people listening to this, they won't remember 2008. I remember 2008 because I went broke. I lost nearly everything. I got down to $3,000 net worth in 2008, literally $3,000 in the bank account. Nearly had to ring my girlfriend's dad for a loan. That's how bad it was. And Dad rang me and said, Adam, you got to buy this stock. He said, 6 months ago, this stock was $15. Today, it's 83 cents. They have $6 worth of gold in their gold mines per stock. Yeah. So if you bought every stock, if you just value the gold that they actually have, they have $6 per share of gold. It's trading at 83 cents. This is how irrational markets get when shit really happens. Mm-hmm. And he said, if you've got any spare money, buy this stock. And I went, okay. So I had 50 grand, I think it was, and I bought 50 grand of that stock, just knowing that one thing. 6 months later, it was $6.50, right? 6 months later. So a 600 and something % return in 6 months, right? And that's what Warren Buffett means by buying when there's blood on the street. And so if there is another Bitcoin drawdown to 50,000 or 40,000 or something like that, that's when I will deploy the big chunk into that. Or if there's a big drawdown on, Facebook or Google.
Something you believe in.
Something I believe in, something strong. Could be Commonwealth Bank shares, it could whatever. When this shit hits the fan, when everybody thinks it's the end of the stock market, it's the end of US capitalism, it's the end of Bitcoin, having the money and having the balls to actually do it. And that's how I made a lot of money in Bitcoin. I took out $2 million against my buildings when Bitcoin was down at, 20, 25.
I have an exercise for everyone. Just do research on any of the top stocks, any of the banks, and just type in what they were worth March 2020.
Correct.
When you look at that and you look at what it is today, I look back and I go, I should have bought Qantas. I should have bought CB. Because March 2020 was the lowest point from COVID. Like 2008, people forget. 2020, people are already forgetting we've been through COVID. It feels like a lifetime ago. But March 2020, you look at what some of those values came down at. But again, you look at the chart and what goes down must come up, what goes up.
This is what people...
And this is the education, right? If looking at that, it is ridiculous. If you just put, and then do some calculations. If I just put 50 grand or 100 grand or 5 grand or 3 grand, whatever your tolerance is in that and what it would be worth even today, it's astonishing. I've done the exercise multiple times.
PBZ said the same thing. He's getting the best financial advice in the world, Patrick Bet-David, right? And he said exactly the same. This is what's coming, is where people add a zero to their net worth. And the hardest thing to do, the easiest thing to do is nothing. Like the problem you've got, Eric, is that you've got a good level of comfort right now. And so the doing the work of liquefying a property and having this cash pile there, it's like, but things are okay. Things are good.
Create stress.
It's going to be, it's okay. And then the shit will hit the fan and all of your properties will probably take a hit, or all of your stocks will take, what we're experiencing, Mark and I as stockholders and Bitcoin holders, right? It'll happen whatever. It'll happen to everyone. No matter what you own, there's going to be a time where it goes down significantly and you go, motherfucker, I should have sold, like what happened to me with my building when I sold it for 5, but I could have sold it for 8 if I'd done it 18 months earlier. Getting proactive and getting ahead of it, and what I want to encourage people to do is to sit down this is why I carry this thing everywhere with me for the Spotify listeners. This is what are they called, these things, Mark?
I've forgotten. Back to pen and paper.
Remarkable. Remarkable. I carry this Remarkable with me everywhere. And I often sit down and go, it's actually on my piece of paper here right now, and I put down where my money is and how much money I've got sitting in cash. And I go, all right, where's my split? Where's my high growth? Where's my slow and steady, which is my van park and putting some more money into some real estate stuff, some into fixed income, and some into, right now, I've never had as much cash that I'm holding because I feel like the wheels of...
Spidey senses.
Yeah, the wheels of the global economy are teetering, and we'll see. So anyway, and I'm looking to people like Warren Buffett and others and going, okay, what are they doing? So just remember, just zooming out, having a bit of thought.
SoftBank just sold all of their NVIDIA. Peter Thiel just got rid of all of his NVIDIA. Like, there's a lot of smart people. But the one thing that caught my attention, because now you've got David Sachs, who works in the government, and Shamath on not last episode, maybe the episode before, said, we're going into a period of risk off for the next few months. And he was so certain about the way he said it. And I fucking heard that, and I'm like, that triggered my spidey senses so much, and then I started looking at charts and things like that. I'm like, I'm taking I'm going a lot of cash here.
As we're sitting here,
because as if they wouldn't be in the know.
Yeah, but sometimes I think like the other way too. Like I know there's definitely, fear and some blood out there, but I'm like, sometimes you just wonder if like what people say is opposite happens. I'm like,
correct,
right? Like,
but that's the risk as I'm liquidating a lot of my stuff. I'm thinking, well, I might have just called the absolute bottom here, and I'm going to look like an idiot.
And Trump might come out and just print like crazy.
Yeah, but again, we don't know, right?
So, yeah. As we're sitting here, I'm seeing on X that BlackRock just moved $500 million of Bitcoin to Coinbase. So, meaning they're moving it out of their wallets and they're going to sell it. So now this would be BlackRock ETF outflows, right? So this would be retail investors who are new to Bitcoin and
and they're wanting their money.
Yeah, they're new. They've gone, oh, thank goodness, BlackRock can get me in some of that Bitcoin stuff, and it's their first drawdown. And so there's all these market dynamics at play at the moment. And Eric, you're right. There is no certainty, guys, in all this stuff. But what I think for the average punter is start what Mark said, because we've got to wind this pot up. Start with your values and finding where your happiness and your joy is. Take care of those things first, and then to have a 10-year time horizon, because if you have a 10-year time horizon for almost any asset except meme coins and shit coins, whether it's real estate, whether it's the stock market, whether it's Bitcoin, I think you're going to be fine in all of those things if you have a long enough time frame.
One thing that is certain is you need to put food on the table for yourself or your family tomorrow. So just make sure whatever you're investing, you've got enough.
Yeah, I know you're not joking when you say that.
I'm serious, because you get some people that just are uneducated and they just go, So
yeah, and again, that I think it's a time to audit your expenses.
Yeah,
Go through and simplify. How can you simplify?
When times are good, not when when times get bad.
Yeah, I live so cheap, like apart from business class flights, which are basically free because of fly points. And occasionally, like, people see me in the fancy hotel in Doha. That was one night. Okay, I dropped $2,000 one night.
Yeah. I've seen the rat-infested fucking places you live.
Oh, shit.
But I'm just saying, I live
around over there as well.
I don't spend money on Louis Vuitton shoes and watches. I just bought this €59 Casio. Like, I'm not spending money like on crazy shit. I don't have leased car. I don't even own a car. So what I'm saying to the average person is live as simply as you can so that you can keep your mental health and your family fine, and then take a 10-year view, you'll be okay.
Yeah, those people always win in the end.
Totally, 100% they do. Guys, thank you for listening. Please, if you've enjoyed the content, drop a comment. Let us know, is this on the right track? Subscribe if you don't already subscribe, because guys, at the end of the day, that is the one thing that enables us to get some more great guests on. People like Ross Cameron, if you missed that interview, absolute rock star. Who was in here. I just listened to it the other day. We get more Ross Camerons in here when we've got a bigger audience. We've got some amazing guests coming up. But that subscribe, that little one action that you can do by doing that, costs nothing, helps us get better people for you, helps this little Aussie business show get bigger. And the other thing that you can do is tell your friends, get unemployable, because that's really the mission here. Is we're all going to be unemployable soon. There are going to be no jobs other than the ones we create. So help us spread the movement, help us spread the mission. Like, subscribe, tell your friends, and comment below. Thanks for that, and we'll see you in the next episode. Hey there, I hope you enjoyed that episode of Unemployable. If you'd like to watch another episode, just click there.